The trend to cashless payment has been around for several years by now, and companies like PayPal, Block or Apple with Apple Pay are often seen as the biggest winners of this. But as the world's biggest payment network provider, Visa is actually the company holding the strings in the background. And even though the risk of disruption is a very real one, and due to their market-leading position, Visa has a lot to lose, their 10-year performance was quite remarkable. With their huge dividend growth, Visa is also a favorite stock in many dividend growth portfolios. But can they also repeat this performance over the next years and deliver market-beating returns to their investors? Or will their competition get the better of them? In this video, I'll dig into the business models and the markets of Visa, analyze their strategic position by doing a Porter's 5 Forces analysis, and have a look at the latest financial statements to see how they are doing. I'll also check their valuation and do a discounted cash flow calculation to determine their fair value. In the end, we will see if Visa is a good long-term investment for us or not. My name is Florian. Welcome to Cashflow Maniac. Let's go! Visa has the ticker symbol of V on the New York Stock Exchange. They're working in the financial sector and were founded in 1958. They have almost 30,000 employees right now, and their headquarters is in San Francisco, California. Their market cap sits at almost $575 billion right now. First, let's start by comparing the total return of Visa with the total return of the S&P 500 over the last years. And in the last year, we can see that the performance of Visa was almost on par with the S&P 500. Over the last 5 years, it looks a bit different. In this case, Visa could outperform the total return of the S&P 500 by just a little bit. But when we look at the 10-year return, we can actually see that Visa did outperform the S&P 500 by quite a bit over the long run. An investment in Visa in this time frame almost yielded double the returns as the investment in the S&P 500. But what exactly does Visa do? Visa does not issue any credit cards by themselves, and they also don't hold any money of their customers at their side. Rather, the Visa transaction involves a Visa card holder that pays with a Visa card and a merchant that can accept the Visa payment. That also includes the bank of the customer and the merchant. So the Visa card is used at the POS device, the point of sale device, and this POS device sends the transaction data to the bank of the merchant, which requests the transfer of the fund from the customer bank to the merchant bank. The merchant bank or acquirer bank then sends the transaction message with the authorization request to VisaNet, from where it is routed to the issuer or the customer's bank. The customer's bank then reviews this authorization request within a fraction of a second, checks the availability of the funds, and approves or declines the transaction. They also make sure that it is really their customer who requests this transaction and not some strange third party that is trying to steal some money. Then the data flow of the authorization reverses through the whole process. The issuer sends the response back to the VisaNet, from where it is transmitted to the acquirer bank. The acquirer or merchant bank then sends the approval to the merchant, and within a couple of seconds, the payment is authorized and the customer is good to go. This whole process involves both banks, and the whole transaction is checked for legitimacy and then authorized via VisaNet. After the authorization, the payment clearing process is done, in which the acquirer bank sends sales information to VisaNet, where all settlement obligations, including fees and charges, are calculated and then transmitted to the issuer. Then the last process, the settlement process, begins, where the issuer basically pays the acquirer through VisaNet. And as the payment network provider, it is Visa's job to safely and speedily handle this whole process, and not only within one country, but also from many different countries, over many different borders, and between many different regulatory areas. A big chunk of Visa's revenue in the year 2023 actually came of this data processing. They made $60 billion in revenue only from this data processing. Their second biggest sector is the service sector, and here they are offering some value-added services. We will have a look at what that is in a second. In this sector, they almost made $15 billion in the last year. The third sector is the international transaction sector. These are basically fees and transaction costs when you are transmitting money from one country to another. So when we sum this up, this revenue is actually more than what Visa states as their net revenue in the balance sheet. And the reason for this is that Visa also have to pay client incentives to get their customers on board, to get the customers to use the Visa payment network and not choose any competitor. So basically, from all the revenue, Visa has to pay a portion of this to their customers, to their clients, to incentivize them to use the whole Visa ecosystem. The key statistics of Visa are actually quite impressive. Here we can again see the net revenue of almost 33 billion US dollars in the last year, and it's actually up 11% from the year 2022. And indeed, if we look at every one of these metrics here, we can see that every single one of them is up compared to the previous year. So this already gives us an indication that Visa is growing quite nicely. What is actually very impressive is the payment volume they did handle over the last years, which sits at 12.3 trillion US dollars and was up 6% from the year 2022. Very important for the shareholders, of course, and for the investors is also the dividend and share buybacks that Visa does. And you can see this makes up around half of the net revenue of Visa. So Visa is really returning a lot of money they earn to their investors. The business model and the services that Visa can provide are actually quite diverse. We can see the core products of Visa, which are the credit, debit, and prepaid card. And around that, they have a consumer payment ecosystem. Here you can see they offer tap to pay, click to pay, and also tokenization, where they are using these network tokens to improve the authorization and reduce the fraud. In the last fiscal year, they have provided 7.5 billion of these network tokens already. But around their core segments, they have the new flow segment. And for this, they are trying to create new opportunities to grow and new sources of money movement through card and non-card flows. And here we can see, for example, they have Visa Direct, which is a payment strategy for customer to business payments over many different countries and territories. They have the Visa Commercial Solutions here, where they offer a portfolio of different payment solutions like business or corporate cards, virtual cards, digital credentials, and also business-to-business payment options. And last but not least, they also have the cross-border solutions, where they align their global network and their network strategy and focus on building an infrastructure to help the customers with the cross-border payments. These cross-border payments bring a whole new challenge in speed and security to this payment network. And around that, they have the business segments of value-added services. When we compare Visa to their competitors, we can really see how strong of a market position Visa actually has. The payment volume of Visa in the calendar year 2022 was 11.5 billion US dollars compared to MasterCard, who was the next biggest one with only 6.5 billion US dollars. For the total payment volume, it actually looks very similar. Here we have 14 billion US dollars compared to 8 billion from MasterCard. And when we take American Express, Discovery, and JCB also into the picture, we can see that basically Visa has higher numbers in all of these metrics than all of their competitors combined. The picture does look a little bit different, unfortunately, when we look outside of America. In this case, Visa is still the strongest player and has still the biggest market lead. But especially when we look at China, we can see that UnionPay really makes the life of Visa very hard. UnionPay could surpass Visa for the first time ever in 2022 and secured a market share of over 40% with debit card transactions. In this case, Visa had a market share of almost 39%, so the difference doesn't look too big, but the card transactions were actually down in case of Visa compared to UnionPay, where they could increase their market share and the purchase transactions by quite a bit. Just a second ago, we also saw that these debit card transactions are one of the core business field of Visa. And throughout their global networks, the debit cards account for almost 64% of their purchase transactions in 2022. And even though Visa still has a very, very strong market position in countries outside of the US, especially in Asia countries, UnionPay is really giving Visa a very hard time. But it's not only the big players that pose a risk for Visa. There are also a lot of fintechs that are trying to disrupt this financial sector and this payment network space. Like, for example, PayPal, that is trying to handle as many transactions as possible within their own app, so that don't need to use any external payment network. But Visa doesn't only see this as risk. They're also seeing this as huge growth opportunity and actually as a key driver for their growth. So what Visa does here is they're trying to really leverage their size and networks effects and are trying to partner with these fintech companies to give them access to their customer base and to their payment network. So they're trying to take the innovative part of these fintech companies, combine it with their payment network to really bring additional value to their customers. And they also don't shy away of merging or acquiring any of these fintechs where they think that fit to their business model and where they can see the biggest growth opportunities. And here in their annual report, they point out that they already have many partnerships with these fintechs and upcoming companies. Basically, they have signed more than 500 commercial partnerships already, each in different stages of their development. Visa is also actively trying to streamline these commercial programs and provide digital onboarding tools to really help these fintechs to cooperate with Visa. When I first analyzed Visa around 1.5 years ago, I was really surprised by the market trend and the market growth in this payment processing market. And here, if you look at this market report from market.us, we can see that they expect a global growth in the payment processing market of 12% until 2032. This is a very good growth, and we can see that Visa is definitely operating in a market with a huge secular trend here. When we look at the strategic position of Visa by doing the Porter's 5 forces analysis, first of all, I think the threat of new entrants is low. In this financial area, we have a lot of regulations that new companies need to take care of, and due to the huge size that Visa has, they can leverage their customer portfolio and they definitely have network effects. Because the more banks they have in their network, the more merchants want to work with them, and the more merchants they have in their network, the more banks also want to work with them. The switching costs for their customers in this case are also quite high. So for these reasons, I think that the threat of new entrants is quite low. The threat of substitutes, on the other hand, I would estimate as high to medium. There is huge competition going on in the sector, and basically all these network payment services are interchangeable with each other. So what is keeping the customers locked into one system are only the switching costs and the costs for the services itself. There are also a lot of upcoming fintech companies like PayPal or Apple Pay or so that are trying to not give the transaction to payment services like Visa, but rather to handle these payments within their own ecosystem and thus lock out these payment service providers like Visa or MasterCard completely from these transactions. The competitive rivalry is very high. Again, basically these payment network services are interchangeable, and only these value-added services bring differentiation between the customers. There is a huge competition going on between Visa and MasterCard in the Western world and also Union Pay in the Asia-Pacific world. And the biggest differentiation between these companies are only the value-added services and the price their customers have to pay for using these payment networks. For the same reason, I would expect the bargaining power of Visa's customer to be medium. Visa's customers are very price sensitive, and if it wouldn't be for the switching costs, the services would be very interchangeable. Visa definitely has to strive to be competitive all the time and to keep up with their competitors. The bargaining power of their suppliers, on the other hand, I would estimate as medium to low. Their suppliers are basically the network of merchants, financial institutions, and technology providers. And even though the competition is quite high, many of these companies would like to work with Visa and would like to leverage the huge network that Visa already has. So overall, we can see that Visa is really operating in a highly competitive market here, but due to their size, due to their market leading position and their value-added services, they really have a very strong position. And especially the network effects they can provide and they can use really do build quite a good moat for Visa. Before we jump into the financial analysis, if you do like the video so far, please consider leaving a like or even subscribing to the channel. Would help me out a lot. Earlier, we could already see that each of the key statistics for Visa could increase in the year 2023. When we look at the income statement of them, we can actually see the same trend. And when we look at the operating profit and the net profit trend, we can see there is a very steady and very even uptrend. So this gives it a very predictable growth. What is really insane at Visa is if we look at the operating margin. And here the operating margin sit at almost 70%, and even the net margin sit at 55%. That basically tells us that Visa can translate a big portion of their revenues directly to net income and also to cash flow. When we look at the balance sheet, we can see the same trend for the EBITDA actually. It is also expected to increase very evenly, and also the forecast for the next couple of years, we also see quite a nice uptrend here. Visa's balance sheet is also very clean right now, and here we can see that Market Screener only calculates the leverage debt to EBITDA with a multiple of only 0.01 debt to EBITDA. When I did my own calculations and I put the long-term debt in comparison with the EBITDA, I actually came up with a different number. In this case, the leverage I calculated was 1.4 long-term debt to EBITDA, but this still is a very, very nice value and no reason for any concerns. I just mentioned the free cash flow, and if we look at the revenue and the free cash flow, we can see basically both is running in parallel. Both does show a very nice uptrend, and only in the last quarter, the free cash flow of Visa had a slight dip. But again, here we can also see that they can translate a huge portion of their revenue to free cash flow. So basically, they can translate half of their revenue directly to free cash flow. And what makes this doubly impressive is if we compare the free cash flow with the CapEx. The CapEx on a year-over-year basis goes down, while the free cash flow still steadily increases. So we are looking at a business here that is basically a cash flow machine and doesn't require a lot of maintenance, a lot of CapEx to keep running. The biggest CapEx necessary for Visa are actually their data centers that they need to run these secure payment transactions. Just last week, Visa showed their financial results for the first quarter in 2024. And here we can see the same trend that we had over the last year. Every of these metrics is trending upwards. We have a positive change in all of them. And especially if we compare the net revenue to the net income, we can see that they basically can convert all the growth of their net revenue directly to the net income. I am pointing here at the non-GAAP net income just because Visa removes some amortization of intangible assets and some acquisition-related costs, which I think makes total sense if we want to look at the operational outcome of Visa. But just to be sure, if you do your own analysis, please have a look at the non-GAAP metrics that Visa includes or excludes in this case. Very nice to see is also if we look at the free cash flow of the last quarter. And here again, the net cash provided by operating activities is translated almost one-to-one to free cash flow. The CapEx necessary for Visa is only very, very small. And as an investor, what we do like to see is that Visa is returning most of this capital directly to their shareholders by either paying dividends or by announcing share buyback programs. And indeed, just in the last quarter, they paid dividends and share buybacks of $4.4 billion. So also for the future, I think it is safe to assume that Visa will keep returning most of the cash they earn directly to their investors. Another statistic that I find very impressive about Visa is that Visa could actually beat the earnings expectations of the analysts every year for the last 15 years. So here you can see, surprise in all of these cases for the last 15 years was always green. They always surprised to the positive side. But we should also keep in mind that this definitely brings the risks of what happens to the stock price if Visa cannot beat this expectation in 1 year. Just something to keep in mind. So when we sum this up by using my checklist, we can actually see that Visa is fulfilling all of my checks here. Revenue growth, they beat my target of 6% with 9.5% on a 5-year CAGR. Net income growth, they beat my target of 10% by just a little bit. They almost reach 11% here, but still, it's a green checkbox for me. And the year-over-year increase in net income actually sits closer to 20%. For the free cash flow growth, it looks a bit different, unfortunately. Here, they could also beat my target of 6% on a 5-year CAGR basis with 6.5%, but the year-over-year value is a bit lower here. When we looked at the graph, we also saw that there was a slight dip in the last quarter, and this unfortunately results in a year-over-year increase of only 0.5% free cash flow. The free cash flow yield, though, sits at a very nice 3.2% right now. The low debt, as I mentioned before, according to my calculation, so I use the long-term debt compared to the EBITDA, sits at 1.4 time debt times EBITDA. this is still well below my target of 3 times debt to EBITDA. So the balance sheet of Visa does look very clean and very nice. Visa is paying a small dividend of 0.75% dividend yield, but the dividend growth over the last 5 years sits at a very high 16.3%. Actually, this is not only true if you look at the 5-year CAGR, but also if you look at the long-term CAGR. It also sits at a very similar, very, very high level. So again, Visa is really trying to reward their investors by returning a lot of their profits directly back to them by either paying dividends or by repurchasing shares. The margins and the return of invested capital of Visa also is on a very, very high level. And what we could also just see in the income statement is that it's actually increasing over the last years. So the overall picture of Visa really looks very nice. It really looks like a very, very balanced and stable company with very predictable revenue and cash flows. For a successful investment, it is not only important to have a good company with good financial data, but it's also important to not overpay for this company. If we look at the valuation of Visa and we look at the EV to EBITDA, the price to cash flow and the PE multiples on a 5-year average basis, we can actually see that in all of these cases, Visa is sitting at the lower end of their 5-year range. So don't get me wrong, none of these metrics is especially cheap. But when we compare the valuation of Visa with their recent history, it also doesn't seem to be overly expensive right now. As a dividend payer, for me it also makes sense to have a look at the average dividend yield of Visa. And here we can see the dividend yield over the last 10 years. And here again, Visa is sitting at quite a high level right now. For the majority of the time between 2017 and 2022, they have been sitting below 0.7, most of the times even below 0.6% dividend yield. We can also see that the highest they have ever been in this time frame have been a bit above 0.8% dividend yield. When we look at the fair value of Visa by doing the discounted cash flow calculation, the Gordon growth model, and the multiples calculation, we can actually see that the average fair value according to my calculation, and you can see the numbers that I used here, are sitting at $360 right now. By including a margin of safety of 20%, it sits very close to the current stock price. It sits at $290, so a little bit higher compared to the current stock price. But if you look at the details of the calculation, we can also see that both discounted cash flow calculations put out a much lower value, while the multiples calculation is actually the only one that gives us a higher stock price than what we have today. The reason for this is basically that the multiples in case of Visa are sitting at quite a high level, and I did use the current values for this, not the 5-year average as I usually do, because the 5-year average actually sits still quite a bit higher. So if you do think that Visa will return to these higher valuations that they had over the last couple of years, the upside here, especially for the multiples calculation, is even higher than what my calculation puts out here. But I'd rather try to calculate this on the more conservative side, and that's why I used the lower values that we have as of today here. In the overall picture, Visa actually looks like a bit undervalued at the moment. In a time where many fintech companies are trying to revolutionize and disrupt this electronic payment market, Visa is still standing very strong. They even see fintechs as part of their growth engine, and with their partnership programs, they could already secure more than 500 commercial partnerships with fintechs specifically. And while the growth of Visa doesn't reach these spectacular levels that some of these tech growth companies have, it still sits at a very nice low double-digit value. But even more importantly, it is very predictable and very stable. With their constant buyback programs and dividend increases, they are also returning a lot of money to their investors, and while the dividend yield is not very high, with a low payout ratio of only 21%, it is also fair to assume that there is still a lot more room to grow. While the valuation of Visa is currently not cheap, their fair value, according to my calculation, still sits a bit above the current stock price, and Visa also has a lot to go for it that warrants a premium valuation from my point of view. Its status as a market leader in a sector with very nice entry barriers and only a couple of competitors gives Visa a very good moat. And due to their size, they can also benefit greatly from network effects. They also have the secular trend of online shopping and cashless payments going for them. But Visa doesn't come without any risks, of course. In this financial sector, there are many regulations that can potentially disrupt the business, and as a payment network provider that handles trillions of dollars every year, cybersecurity has to be a major concern for them. Overall, I think that Visa is a great investment, especially if you're looking for a dividend growth company and you don't need a high dividend yield right now. For that reason, I am already invested in Visa, and I'm also still trying to grow my investment every time the stock has a slight dip. But please, don't take only my word for it. Please analyze Visa also according to your investment strategy, if it fits or if it doesn't fit. So if you did like the video and if you did find the analysis helpful, please leave me a like or subscribe to the channel. Also, if you're interested in statistical data for the stock market and the general economy, that really helps us to build our investing strategy and investing portfolio in general, please have a look at my video from last week, where I sum up the best insights from the JP Morgan Guide to the Market 2024. I'll put a link to it right here, or maybe here. That being said, thank you so much for watching, guys, and see you next week.